I can't hold my tongue any longer. What just happened with Facebook and the bullshit analyst downgrades makes me freaking pissed off. I mean, these so-called analysts are garbage, and I'm going on a rant, so play my damned intro sequence. Let's get started. All right, so you know the story with Facebook, all right? The Mark Zuckerberg ego machine just got blown up like the Death Star with a torpedo to the exhaust port. And the worthless Wall Street analysts are reacting like lemmings after the fact. This is garbage. Freaking garbage. All right, hold on. I gotta catch my breath before we go any further. Don't forget to like and subscribe by hitting those buttons below. If you've already subscribed and you don't want to miss a single episode of Trade Talk Tuesday, hit the bell and then YouTube will notify you every time we drop a new episode. So, all right, that's over. Back to the rant, okay? As I'm sure you've heard, Facebook's daddy company Meta got absolutely gut punched last week, shedding $200 billion in market cap in one single day. That's more market cap than Netflix. The entire freaking company is valued at gone, vanished into thin air, just like that. I mean, it was Facebook's largest single day drop ever. Well, why? What happened? Well, the artist formerly known as Facebook held its quarterly earnings call, and they said that they're seeing $10 billion in lost sales, basically thanks to Apple's new privacy policies. So add to that revelation that Facebook managed to lose 1 million daily users last quarter, and that is a recipe for a stock chart to get kicked in the just like this. Check this out, okay? Now look, I'm not pissed at Facebook. I'm not upset that Facebook moved lower. This is Wall Street. These sort of moves happen. What I am pissed about is what you heard from the supposed analysts who follow Facebook. I mean, look at this trash, right? Once they saw that Facebook was down $70 in the pre-market, well, then JP Morgan downgraded it from neutral to neutral from overweight. And then Loop Capital downgraded it from hold to buy, and then Raymond James downgraded, and then BMO Capital downgraded, and my freaking Uber driver on the way over here who has no business dispensing any financial advice, he even downgraded it. It's like, good thinking, you idiots. Like, I really applaud your razor sharp analysis. Like, where the hell was all these downgrades before the Facebook earnings call? Like, you're an analyst, you follow Facebook, you have one freaking job, okay? So if Meta is about to piss the bed, then you need to find those red flags before the stock gets slaughtered. I mean, this is not like a new thing. Back in April of last year, Apple released a privacy update that torpedoed Facebook's advertising model. Did any analyst think to figure out how that would impact their earnings? No, of course not. I mean, are they too lazy? Are these guys too busy ordering their third martini at lunch? Oh, no blue cheese olives. I want to speak to the manager. It's bull crap, right? Facebook had more red flags than you see hanging outside a communist dictator's house, and nobody warned us ahead of time. I think it's criminal, right? I mean, think about it like this. Do sports bettors give out their top picks after the games are played? Of course not. That's nonsense. So why is this the case on Wall Street? Why do we accept this, right? These analysts, like these guys, they might as well get paid to predict the winning Powerball numbers the day after they're selected.
And the last is Milwaukee Bucks.
Why on earth does anyone still pay attention to these lazy, useless upgrades and downgrades? It's beyond me. And oh, you know what? Here's one that really gets me while I'm on this topic. You oftentimes see an analyst take a stock that he has a sell rating on, and then they go upgrade that stock to hold. It's like, what? Like, how in hell can I hold a stock that you told me to sell? Like, what the hell on earth is happening here? Long story short, for any analyst who's good at their job, it's now clear that this information was available for months on Facebook, right? But the well-fed Wall Street lemmings sat on their until Mark Zuckerberg squeaked out this wet fart of an earnings call, and everyday retail investors are left holding the bag. That's the problem with analysts today. They're too reactive. And half of the time, they're just feeding you what they saw on CNBC headlines that morning. I mean, plus, this gets me pissed too. They have zero accountability for being dead wrong. Like, is anyone going to get fired for not alerting the masses about Facebook's issues? No, of course not. It's just another damn day on Wall Street. I mean, no wonder most brokers struggle to beat the market.
I have no idea what I'm doing, but I know I'm doing it really, really well.
And that's where I come in. I mean, am I perfect? No, certainly I'm not. But am I willing to take accountability and put my money where my mouth is? Yes. Freaking yes. That's why I guarantee you an 83% win rate. Yeah, I'm not kidding. Follow my picks and you'll get an 83% win rate guaranteed. So shove that in your pipe and smoke it, you good for nothing analysts. Click that link below and I'll show you how it's done. And that's it. Rant over. Cue my damn exit music. Yeah. I just knocked over the light.